Hey guys, this is Mark Shawson, the Pattern Trader. In last week's weekly video report, I entitled my letter Dollar Yen Slam Dunk. Now, admittedly, I've got a very public profile, so I'm always a little reticent to go on the record and say certain things. But to my mind, the dollar versus the yen represents as close as you can to a riskless trade. Now, again, I realize this can get me in all kinds of trouble. I don't want you guys to sell the farm, bet the ranch, and then come back at me and say, look what you did. But in my weekly video report, I peeled back every layer I could find to look at the dollar versus the yen from all angles, including a long-term 45-year chart. So many of you are using 5-minute charts, 15-minute charts, even 4-hour charts. I would hazard a guess that you cannot see a global bird's eye view as you can if you would use a long-term chart. And certainly in the case, if you looked at the 45-year trend of the US dollar versus the Japanese yen, you'll see from 1975, starting from a level of 350, we've descended to a level in 2020 at 106. So unambiguously, just a profound, prolific downtrend that I don't see anything that's going to interrupt this. So to my mind, it's not a question of if, but when the US dollar versus the Japanese yen continues its downward spiral. So over the weekend, dollar yen was trading about 106.80. I advocated to our members to sell anywhere, slash and burn. It was trading around 106.80, and we've just gone down about 60, 70 pips from there to about the low 106. But to my mind, this downward spiral is just starting, and to my mind, represents one of the best risk-reward trades that you can find. Now, again, like I said, it's not a question of if, but when. So I fully anticipate going into the summer, we could get some sideways trading. We may go into a range with dollar yen. But eventually, I have no doubt in my mind, based on all of the chart time frames, starting with the 45-year chart, the monthly chart. And again, when I break apart the weekly chart, going back to 2015, we had a governing price pattern, a double top price pattern. When I say a governing double top, it means once that price pattern has been established, it basically denotes the trajectory of that instrument from there on. And in the case of dollar yen, we had this governing double top at the 126 price level in 2015, and we're trading at 106 now. So this has been a stealth bear market, going down in fits and starts, but we are down 2,000 pips from when we were in 2015. And now in the closer time frame, we have a descending triangle on the weekly charts. And then more recently, in the last couple of weeks, we had an H top because it looks like the letter H, or a horn top because it looks like the head of a steer. But there is every bearish chart pattern in any textbook or website. Every classic bear price pattern is represented on the dollar yen price chart. Now, the fact that dollar yen closed under the lows of the past 3 weeks since it set the top of that H chart, to me, this was confirmation, a green light, and there is nothing that can stop this freight train from going lower. So this is a trade that I expect to camp out in for quite some time. I'm also short a number of yen cousins because I think the yen is going to strengthen across the board. So I'm short euro yen and pound yen at the same time that I'm short dollar yen. So just to wrap up, I hope you got a ton of value from this video. If you would like to check out my weekly video report, it's available for the grand price of anything you want to pay. That's right, you determine the value, you determine how much you want to pay. Click the link attached to this video and download my weekly video report. So with that said, I wish you a healthy and prosperous trading day, and I'll see you next time.